Okay, hi everyone, and welcome to this Thursday, the 19th of September lunchtime webinar. This one's a bit different. What I've decided to do is I've decided to go with a market wrap, just a basic recap on what happened at the beginning of the week leading up to today and last night's volatility, as I'm sure you guys have noticed. So that's basically what is the plan for today. And we're going to start with a recap of Monday and Tuesday's movements with some of the major pairs and gold. Okay, that's what we're going to start with, and we're going to take it from there. Beginning of the week, mainly with the majors, we saw a lot of US dollar weakness leading up to the FOMC announcement, which was a two-day announcement coming out on the Wednesday evening, but usually started on Tuesday morning. Major currencies strengthened against the dollar, price of crude oil dropped, and gold traded with heavy volatility. Okay, so this was leading up to Wednesday's volatile FOMC announcement and time period. And let's have a look at some of the charts. So first I've got here's a Euro-dollar 15-minute chart. This is a reflection of Monday and Tuesday's movement. As you can see, pretty volatile. All in all, though, you can see leading up to Wednesday's announcement, the dollar was weakening significantly against the euro. The beginning of the week, the euro strengthened after a Federal Reserve Vice President Larry Summers announced he will not be the next chairman of the Federal Reserve, so counting himself out. That was bad news for the dollar. So the euro took advantage of that, but quickly rebounded again after that. As you can see, there's a clear bullish trend on the 17th or so, on Tuesday early morning until late morning. You saw the dollar weakening quite considerably against the euro. Positive German economic sentiment data came out. It was positive, so created a bullish move and boosted the euro up against the dollar. So even before Wednesday's movement, you saw the dollar strengthening. You saw the euro strengthening against the dollar. Looking at the dollar yen, last week we saw the psychological level of 100 being breached and broken, but somehow failed to maintain its bullish momentum. So once it broke the 100 barrier, it didn't stay above that. Like the previous time it broke it went up to 103, but this time it failed to stay above in a bullish move, and the dollar came back down and the yen strengthened. Okay, as you can see here, the Japanese yen curbed the recent strength of the dollar ahead of the FOMC announcement on the Wednesday night. So you can see already a bit of pre-movement here for the dollar. It didn't trade too well in the beginning of the week leading up to the announcement on Wednesday. And you can see as a result here, the Japanese yen did strengthen somewhat to trade around the 99 level here and stabilize around there. If we have a look at gold, this is very interesting, guys. You'll notice a lot of heavy volatility surrounding the precious metal market and the bullion market, so not just gold, but silver as well. You see quite big spikes in the market, a few dips, dives, things like that. You can see I've circled them here. You can see very clearly that there's been a volatile gold period in the last few days. So very difficult to find a long-term trend here. I recommend for traders to, if they're looking at gold, to have a bit of a short-term outcome, or their intentions should all be short-term with gold at the moment. Heavy volatility leading up to the announcement. As you guys know, gold is a very volatile instrument to trade, fluctuates hundreds of pips a day, and has a very inverse relationship with the dollar. So when the dollar moves, so does gold, but in the opposite direction. So we've got a strengthening dollar will send gold dropping in price. A weakening dollar will send gold appreciate in price and go up. Okay, so that's the relationship that we have here, and you can see some clear volatile periods leading up to Wednesday, so through Monday and Tuesday. Crude oil, as you can see, has been in demand over the last few weeks as the crisis in Syria dominated the headlines. But as you can see, the demand and the value of crude somewhat dropped quite considerably, over $3 this week, and is currently in a bearish channel up until Wednesday. So Monday and Tuesday trading bearishly, and the reason for that is it seems like the tension in Syria has somewhat calmed down. They believe that the chemical weapons are going to be handed over to the United States, and a war seems to be put on hold, and no attack will take place. So obviously the demand for crude oil slightly decreases and the supply goes up, and That's why you've seen a drop in price in the beginning of the week as opposed to last week when there was an announcement that Syria was going to be under attack by maybe the USA and France, but that has come under control, and that's why we've seen the change in crude oil prices in the beginning of the week. All right, ladies and gentlemen, this is really what I want to talk about for the majority of the recap, the market wrap-up that we have here. The FOMC press conference, okay, led by the Fed Chairman Ben Bernanke. This took place in the United States at 8:30 p.m. South Africa time. Now, leading up to this announcement, the dollar was very vulnerable. A lot of traders believed that the Federal Reserve will begin to taper the bond purchasing on a monthly basis, also known as quantitative easing. And that is pretty much putting a halt to the strength of the U.S. economy. And everyone believed that the tapering will commence in September. And the result was somewhat surprising. And the build-up created a lot of movement on Monday and Tuesday with the dollar, as you can see. So a lot of the major counter currencies, so the yen, the euro, the pound, all strengthened against the dollar leading up to Wednesday. So on Monday and Tuesday, like I showed you. And also create a lot of volatility for the metals. The announcement, which was aired on Bloomberg TV channel, was coming out at 8:30 p.m. SA time. I watched it myself, and it was very interesting and somewhat surprising. The results, they decided not to go ahead and taper the QE program, which caused the dollar to plummet. Okay, as a result, the euro strengthened against the dollar, the pound strengthened, the yen strengthened, gold boosted in value, silver boosted in value, crude oil boosted in value. So heavy volatility was a result of this announcement, and Ben Bernanke, the chairman of the Federal Reserve, stated that the Federal Reserve will do the right thing for the economy, and for now the right thing is to take no action on tapering bond purchases just yet. And a few questions were asked as to why not, and a pure response from Bernanke was that he reiterated that data did not meet standard for taper to take place. So the Federal Reserve and the U.S. government is waiting for consistently impressive and positive fundamental data to come out of the economy, whether it's retail sales, manufacturing, anything like that, employment data, unemployment data. And in order for the tapering to take place, this is what is required. We need some positive, consistently positive and impressive data coming out of the United States. And employment data as well. Unemployment needs to drop below the 7% in order for the tapering to take process, maybe 6.5%. So what this means for traders is it just shows you how important the next few weeks are going to be with the economic calendar. Looking at all the dollar-related fundamentals, macroeconomic data, are they going to be positive for the United States? If so, tapering will be more of a realistic option for Ben Bernanke and the Federal Reserve. And once that happens, you will see the dollar starting to strengthen and really become a dominant force in the market. So that's really when you're going to see the dollar strengthen against the likes of the yen, the euro, the pound, even the Aussie dollar, and you might see gold drop down. Okay, so all in all, the impact on the market, I'm going to go through the charts with you, but in case there's some of you that trade particular assets, maybe some metals, I just want to go through some percentages, the impact that this announcement had on the markets. Okay, the euro dollar increased over 1%. Dollar yen dropped down 1% there, so the dollar dropped 1% against the yen. The pound dollar increased by 1.4%, so the pound strengthened nicely there. The Australian dollar came in nicely and performed well against the dollar, increased by 1.4%. Bullion market, gold price was up 3.5%. Silver, a very high-performing metal, in fact, outperformed gold the whole of last year, up 4.9%. Copper, a very, very interesting and profitable metal to trade, up 2.8%. Okay, the dollar ZAR, the dollar rand, recently, guys, you saw it went as high as 10.5. It traded as low as 9.5. Okay, 9.5. The dollar took a hit. The rand strengthened, so it's moved a hell of a lot in the last few weeks. U.S. indices jumped to record highs, in particular the Dow Jones, all the way up to a record high, well over the 15 mark. The S&P 500 climbed to record high as the Fed maintained its QE3 program, so no tapering took place. And also at the time of the announcement, stocks neared a session high again as the Fed refrains from tapering the QE3 program. Okay, so this is just an example of the kind of movements that the fundamental announcements can take place. And this particular FOMC press conference, guys, was really highly anticipated. You know, many banks and economists around the world really did predict the tapering would take place in September. The only bank that didn't was the Bank of America, where some economists believed that the data up until now has not been good enough and has been underperforming. So they predicted that the tapering would not take place. Everyone else thought it would. And they also believed that the cut from the tapering would be at least a $10 billion cut. And as a result of Ben Bernanke's speech, there was zero cut. Okay, so this is why the dollar plummeted so much. So what I'm going to do is I'm going to go to our MT4 chart, and we basically going to go through all the different currencies and things like that on the chart and just show you a bit of movement here. Okay, so here we have the Aussie dollar 15-minute chart. As you can see, the impact of the market was huge. You can see at around 8 o'clock last night, just before the announcement started, you can see a huge move here. The Aussie was very bullish against the dollar and a huge bullish move in the market. As you can see now, it's somewhat stabilized around the 0.95 area, but that's a strong indication that the Aussie is likely to strengthen, or the dollar is likely to weaken for a considerable amount of time, because there hasn't been a correction back into the market. If you notice, usually fundamental data will go one way and then rebound or correct again and go back down the other way. So we would have seen an uptrend here and then a downtrend shortly after, but we have seen that the dollar is still weakening as a result of this Fed announcement, and that's why we've seen the Aussie stabilize high up against around the 0.95 area. Okay, if we go to the dollar yen, same thing here, guys. You can see that the dollar dropped considerably against the yen, all the way down to under the 97.8 region. Okay, the lowest has been there for a while. And previously, a few days ago, even last week, we saw it go above the 100 mark. So it's dropped quite a lot. It's dropped significantly as a result of the Fed announcement. And it's making its way back slowly, back up to normal rates this afternoon. Heading into this afternoon here, but for me, the dollar weakness is not over. For me, it's going to take a bit of a long time until the dollar strengthens, and it might need to for tapering to take place in order for the dollar to really show its strength in the market. Moving over to gold, as you can see, the bullion market really benefited from a weakening dollar. Like I said, gold strengthens when the dollar weakens. As you can see that just before the announcement, gold shooted up, touching the 1375 mark, okay, very high, edging close to that 1400 level again, and somewhat stabilized around the 1360 and 1369 region, and comfortably trading around 1365 at the moment. So it's stabilized very high up. Another indication that gold is going to strengthen, but the dollar is still is likely to weaken. Investors and traders will be worried about the short-term future of gold price, of the dollar price. So from gold, we're going to have a look at silver, another precious metal. Pretty much exactly the same movement, guys. As you know, silver moves in conjunction with gold. Very similar price movements here. You can see silver outperformed gold, actually jumped up 4.9% to trade around the 22.9 area and reached as high as 23.1, a very high level for silver. Nice to see the precious metal going this high. Another indication that these metals really outperform gold, outperform the dollar in times like this. So very good to see, stabilized around the 22.8 and 22.9 region here, and let's see if it maintains its high level. Moving to the cable, GBP USD we've got here, you can see that again it appreciated very nicely against the dollar. Stabilized somewhat, and then the dollar rebounded a little bit back to take it back to 1.607, but still quite high up on yesterday. We haven't seen a full rebound just yet. Euro dollar, the world's most popular currency pair. Okay, you can see a clear bullish move here as well, and stabilized very nicely around the 1.355 mark here, and it seems like it's going to stay that way for now. Perhaps some economic data later today or tomorrow will If it's positive for the dollar, it might push those recent euro gains lower. But for the time being, it's stable around the 1.355 mark. And you can see clear bullish trend here. No sign of a rebound just yet. The dollar-ZAR, have a look at this, ladies and gentlemen. Even though the dollar-ZAR is an exotic currency pair and also is known to have quite a wide spread, you can see a clear depreciation in price here. The dollar really struggled against the rand here. Last week traded as high as 10.5. Now it's as low as 9.6 to the rand, so 9.6 to the dollar. So the rand did very well here against the dollar. Somewhat rebounded again. You can see it went as low as 9.53. Now it's trading around the 9.963 mark. So let's see what happens. Keep your eyes on this pair. It's very volatile, but as you can see, it's made some clear movement as a result of the Fed meeting. Now we move over to the Dow Jones Industrial Average. We've got the US index here. Like I said, the Nasdaq as well as the S&P also did very well. Record highs during the session, during the meeting last night. And you can see the Dow jumped to record high, the highest it's ever been. And it's very good to see. Traded as high as 15.72577. The highest it's ever been. It's a record high. Very nice to see. The question is, will it maintain its bullish momentum? Only time will tell. At the moment, it's stabilized, and we'll have to see what happens. But as you can see, a very clear bullish move here, a clear spark in the market. Lovely to see the impact that certain fundamentals and announcements can have on the market. Okay. So, guys, what this means for you as traders, last night, you would have made some very good trades on a weakening dollar, and it could have been a bit difficult to get into a trade beforehand, purely based on the fact that sometimes during speeches, especially if it's the Federal Reserve President Ben Bernanke or the ECB President Mario Draghi, it's very difficult to get into a trade before. Purely for the fact that sometimes there's pre-movement, there's pre-movement in the market and it moves one way, maybe the other. During the announcement, the markets will move, and after the announcement. So what I do recommend is, a lot of people ask questions to Ben Bernanke during the Federal Reserve meeting, and look out for the answers that comes to him. And it's very important that you pay close attention and watch the announcements live in order to really get a feel of what's going to happen in the market. Okay, so what we're going to do is we're going to look at the potential market movement for next week. As you can see now, all eyes are on the dollar going forward. How long will it take for the Fed to start tapering the bond purchasing and asset purchasing program? Will the dollar continue to weaken? That is the question, ladies and gentlemen. And next week we can look forward to quite a number of high-impact fundamental announcements. Monday, starting with the euro, we've got French and German manufacturing index figures coming out. And as you know, France and Germany are the biggest economies in the Eurozone. So anything affecting these two nations are going to have a direct effect on the euro. Will the euro maintain its bullish move against the dollar? We will find out on Monday with the manufacturing results. Tuesday, 10 a.m., we have a German business climate. As you know, Germany, again, biggest economy in the Eurozone, very powerful. Whatever affects Germany will affect the euro. So expect a lot of movement with the euro on Monday and Tuesday morning, respectively. In the afternoon, we have some movement coming out of the Canadian dollar. Core retail sales, another high-impact news announcement, followed by a 4 p.m. consumer confidence report coming out of the States. So will this be the first mover or shaker for the dollar? Will the dollar strengthen as a result, or will it maintain its bearish move? We will check on 4 o'clock SA time on Tuesday. Wednesday, we have a trade balance report coming out of New Zealand. The Kiwi dollar, since its interest rate was modified last week, has moved the markets quite a lot. It's been very volatile. Will the New Zealand dollar maintain its volatility next week? Only time will tell. Tune into the economic calendar to find out. 2:30 and 4 p.m. respectively, we have core durable goods orders, followed by new home sales reports coming out of the States. And these are both strong indicators of economic health. And any positive data coming out of these two reports will probably boost the value of the dollar. Okay, so you will see the dollar strengthen somewhat against the major counterparts, and gold might take a hit as well as silver if the dollar does strengthen. But guys, don't forget, the dollar is pretty weak at the moment, and it'll take a bit of time for the dollar to find its feet again and strengthen again. So just because if you see positive results and if you don't notice any big movements, it's purely for the fact that traders and investors still believe the dollar is going to weaken. as a result of not tapering the QE program just yet. So what I'm saying is always look out for movements. Don't make any rash decisions. See what's happening in the market with the dollar before a trade is opened, because the dollar has taken a big hit from this announcement last night. Okay, moving into Thursday, we have again the ANZ Business Conference coming out of New Zealand. Current account coming out of the UK, so the pound expected to move Thursday morning. And then you've got unemployment claims and pending home sales coming out on Friday as well, 2:30 and 4 p.m. respectively. So we can expect some movement, guys, next week with the dollar. So all eyes on the majors next week, dollar, yen, $0, pound, dollars. Have a look at gold and silver. See what crude oil is doing. The Dow Jones is moving quite nicely as well. So there's a lot of high impact news events next week. Friday is going to be quite quiet. Just so you guys know, next Tuesday is Heritage Day, but the markets will still be open. It's business as usual, and expect some movement in the market. So this is what you guys can look forward to for next week. And any questions, please let your account managers know. Please tune into the economic calendar either on forexfactor.com or use Trader24's economic calendar. Please make sure that your time periods are GMT +2 for any local residents. We don't want to miss the opportunities. And that's it, ladies and gentlemen.